Ibovespa surges on softer-than-expected inflation. Brazil stock market. The Ibovespa jumped nearly 2% to trade close to 176,000 on Friday after Brazil's inflation data came in below expectations. Annual inflation eased to 4.64% in June from 4.72% in May, below market forecasts of 4.8%, bringing it closer to the BCB's target range of 1.5% to 4.5%. The softer inflation reading pushed bond yields lower and strengthened expectations that the central bank could adopt a more dovish stance. Financial stocks led the rally, with Itaú and Itaúsa gaining more than 2%, Bradesco rising over 2.5%, and B3 advancing more than 3%. Utilities also moved higher, with Axia and Sabesp up over 2%. Other notable gainers included Rede D'Or plus 3% and CSN plus 4%. 0.40 seconds ago. TSX futures muted. Canada's stock market futures tracking the S&P/TSX Composite Index were little changed on Friday as investors assessed June's jobs report and renewed tensions in the Middle East. Canada added 18,000 jobs in June, above expectations for a 10,000 increase, following a gain of 88,000 in May. The strong reading pointed to a heated job market, raising concerns over higher interest rates. Meanwhile, oil prices ticked higher as renewed U.S.-Iran hostilities disrupted shipping through the Strait of Hormuz, reviving concerns over supply disruptions and energy-driven inflation. Also, gold prices slipped, weighing on miners. Elsewhere, Velan reported an adjusted first-quarter net loss. On the trade front, Prime Minister Carney said Saudi Arabia could help Canadian mining firms expand globally and met with the head of Saudi Aramco to discuss deeper cooperation. Belarus annual inflation eases to 4.3% in June. Belarus's annual inflation rate eased to 4.3% in June 2026 from 4.8% in May, marking the lowest reading since October 2023. Price growth slowed notably for food products, 3.4% versus 4.9%, while inflation for non-food goods edged up to 2.1% from 2%. Meanwhile, services inflation accelerated to 8.8% from 6.7% in the previous month. On a monthly basis, consumer prices rose 0.3%, following a 0.1% increase in May. Canada building permits fall in May. Canada building permits. Canada's building permits fell by 1.7% month-on-month to 12.4 billion Canadian dollars in May 2026, slowing from a decline of 7.6% in the previous month and contrasting with market expectations of a 2.4% increase. The decrease was driven by the non-residential sector, where permit values dropped 6.1% to 4.7 billion Canadian dollars, led by a decline in the industrial components by 341.0 million Canadian dollars, while an increase in the commercial component tempered the decline by 81.4 million Canadian dollars. In contrast, the value of residential permits increased 1.2% to 7.7 billion Canadian dollars, as a 161.9 million Canadian dollar increase in multi-unit permits more than offset a 70.7 million Canadian dollar decline in single-family permits. Compared with the same month a year earlier, the total value of building permits was 4.5% lower. Canada employment tops forecasts in June. Canada employment change. Canada's employment increased by 18,000 in June 2026, above market expectations for a 10,000 gain, following an increase of 88,000 in May. Employment rose 0.1% from the previous month, driven by a 32,000 increase among private sector employees after a 56,000 gain in May. Accommodation and food services added 15,000 jobs, marking a third consecutive monthly increase. In contrast, manufacturing employment fell by 17,000, reversing much of May's 15,000 increase. Public sector employment declined by 31,000. Regionally, employment increased in Quebec, plus 14,000 for a second straight month, as well as in Nova Scotia, plus 4,800, and Saskatchewan, plus 2,900. Meanwhile, the employment rate edged up 0.1 percentage point to 60.8%. Mexico industrial output falls more than expected. Mexico's industrial production fell 0.7% year-on-year in May 2026, reversing a 2.3% increase in April, lower than market expectations of a 0.1% drop, as weakness was broad-based across sectors. The downturn was led by a contraction in manufacturing activity by 1.5% after a flat reading in the previous month, reflecting weaker output across industries, particularly in the manufacturing of computers and communication-related equipments, minus 7.5%. Utilities production declined further to 0.9% from 0.4%, while construction activity fell 0.3%, reversing a 10.4% gain despite a surge in civil engineering works, 15.9%. Meanwhile, mining and quarrying output growth accelerated to 3.9% from 3.4%, supported by stronger growth in mining-related services, 51.3% versus 23.7%. On a seasonally adjusted monthly basis, industrial activity fell by 0.8% in May, reversing a 2.1% increase in the previous month. Canada unemployment rate unexpectedly drops. The unemployment rate in Canada eased to 6.5% in June of 2026 from 6.6% in the previous month, below market expectations that it would remain unchanged and tying for the lowest since July of 2024. Net employment rose by 18,000 positions to 21,139,700, mostly supported by part-time positions. In the meantime, unemployment fell by 13,200 to 1,469,200. This was aligned with a job-finding rate, which is the proportion of unemployed who found a position since May, to 24.3%. The developments translated to an unchanged labor force participation rate of 65%, which has remained relatively steady since the start of the year despite the energy supply shocks due to the war in Iran and the exchange of tariffs with the United States. Brazil annual inflation eases. In June, Brazil's annual inflation rate eased to 4.64% in June 2026 from 4.72% in May, below market expectations of 4.8%. Price growth slowed for food and beverages, 3.82% versus 3.87%. Housing, 5.85% versus 6.22%. Clothing, 3.99% versus 4.6%. Transport, 3.95% versus 4.05%. And education, 6.33% versus 6.36%. Meanwhile, inflation accelerated for household articles, 0.69% versus 0.54%. Health and personal care, 6.21% versus 6.04%. Personal expenses, 5.79% versus 5.77%. And communication, 1.83% versus 1.75%. Energy and fuel inflation remained elevated at 7.71%, reflecting supply disruptions linked to the closure of the Strait of Hormuz during the U.S.-Iran conflict, although it eased from 8.9% in May as geopolitical tensions showed signs of moderating. On a monthly basis, consumer prices rose 0.16%, following a 0.58% increase in May. Kenya economy gains traction in Q1. Kenya GDP annual growth rate. Kenya's economic growth accelerated to 5.3% year-on-year in Q1 2026 from 4% in the previous period, marking the strongest expansion since the last quarter of 2024. The pickup was driven by broad-based gains across all sectors, with the key agricultural sector rebounding strongly. Agricultural output rose 4.9%. Reversing a 1.3% contraction in Q4 amid improved weather conditions. Tea production 3.1%, cane deliveries 6.2%, milk deliveries to processors 2.2%, and cut flour exports 4.3% recorded notable growth, offsetting lower coffee production. Other key contributors included accommodation and food services 14.7%, mining and quarrying 9.1%, construction, 6.6%, financial and insurance activities, 6.3%, and information and communication, 5%. On a seasonally adjusted quarterly basis, the GDP rose by 1.3% in Q1, the same pace as in Q4. U.S. futures maintained mixed momentum. United States stock market futures tracking U.S. indices were mixed on Friday, extending the momentum of a volatile week as chip producers paired yesterday's rally and lower Treasury yields aided traditional economic sectors. Contracts for the S&P 500 inched down and those for the Nasdaq 100 fell nearly 1%. SK Hynix ADRs were due to begin trading in domestic stock exchanges for the largest first-time share sale by a foreign company. Reports that the offering was 7 times oversubscribed lifted AI infrastructure companies, especially boosting memory producers after Micron increased its investment guidance. The speculative sector trimmed yesterday's increase with Micron and SanDisk down over 2% each pre-market. In turn, the Dow inched higher as it is not directly exposed to chip producers. Financial companies and traditional economic sectors enjoyed some respite as oil prices halted their rebound and softened concerns of another rate hike by the Federal. Also, Delta added 2% on strong earnings and a dividend increase. Gold dips as oil surge fuels Fed tightening fears commodity gold edged lower to $4,100 an ounce on Friday, ending the week down about 1.5%. As rising crude oil prices and escalating U.S.-Iran tensions raise concerns that the Federal Reserve may maintain tight monetary policy for longer. Oil surged 5% this week after renewed strikes between U.S. and Iranian forces, heightening inflation fears and prompting markets to price in a near 60% chance of a September Fed rate hike. Investors will closely watch U.S. inflation data due next week and Fed Chair Kevin Warsh's testimony for further policy cues. Minutes from the Fed's June meeting revealed growing inflation concerns, with some policymakers having favored a rate hike before rates were left unchanged. Meanwhile, gold faced a wide discount in India this week due to price volatility, while demand in China remained steady. China's central bank reported its largest monthly increase in gold reserves in over 2.5 years in June. U.S. stocks waiver on Friday. United States stock market U.S. stock indices were mixed on Friday, with more volatility for heavyweight chip producers clashed against a pullback in Treasury yields, aiding traditional economic sectors. The S&P 500 and the Dow inched higher, while the Nasdaq 100 fell 0.5%. The SK Hynix ADRs were due to begin trading in domestic stock exchanges for the largest first-time share sale by a foreign company. Reports that the offering was 7 times oversubscribed lifted AI infrastructure companies, especially boosting memory producers after Micron increased its investment guidance. The speculative sector trimmed yesterday's increase with Micron and SanDisk down over 2% each. In turn, the Dow inched higher as it is not directly exposed to chip producers. Financial companies and traditional economic sectors enjoyed some respite as oil prices halted their rebound and softened concerns of another rate hike by the Federal. Also, Delta added 2% on strong earnings and a dividend increase. Baltic Dry Index up for second-day commodity. The Baltic Exchange's Dry Bulk Freight Index, which monitors rates for ships carrying dry bulk commodities, was up for the second session on Friday, rising about 1.2% to its highest since June 5th at 2,944 points. The Capesize Index, which typically transports 150,000-ton cargoes including iron, ore, and coal, also advanced for the second day, rising 1.9% to 4,655 points. And the Panamax Index, which tracks vessels carrying around 60,000 to 70,000 tons of coal or grain, was little changed at 2,253 points. Among smaller vessels, the Supramax Index increased by 0.4% to 1,706 points. The benchmark index rose about 8.4% for the week.